Good evening, master traders and money magnets. Looks like SPY did something that it has not done in a few weeks, and it gave us two consecutive green days in a row. This is the first time it's done this in a while, and it's getting very close to back testing the 200 daily moving average around 572.6 ish, and then filling in that gap around 571 ish, guys. The bounce continued from last Friday. How much more does the Bulls have in them to keep going? Well, as far as how we traded, once again, we always use the levels. In my Discord, I write the general lean. I do this for people who may not want to watch my morning video. This helps them get the gist of the day, the plan for the day, a little quicker so they don't have to hear my voice and watch my video. But of course, if you watch my video, I'm always grateful for that. But I wrote here for the SPY to keep the bounce from Friday going. 560.8 must defend as support. Any bounce from there must be strong enough to clear 562 and 563.5 to put higher targets in play. Okay? And I wrote here, if Friday's bounce is today's dead cat bounce, then support at 560.8 and 559 must fail. Now, I wrote this really early in the day, and of course I had updates in the SPY update room. But overall, guys, the point was that we were going to be bullish above that 560.8 level. Why? Because 560.8 was the 1.382 fib level. We recaptured that level on Friday. Now, you guys remember, Uncle always say, not every false breakdown leads to a bottom, but every bottom started with a false breakdown. Now, Uncle's not calling for a bottom, but at the very least, we are getting a relief bounce. After weeks and weeks of just dropping, we finally got two consecutive green days in a row, and it started with the recapture of a lost critical level, which was that 560.8 level. That was a fib level. Because of that false breakdown setup from that level, I had a general lean to be bullish as long as above it, and I would have switched bearish if we dropped back below. And you guys can see on the 15-minute chart in the pre-market, it bounced off that level, but I'm an option trader, so I don't really I didn't get to trade that. But in the trading hours, it cleared my next level. It's stayed above 562, cleared 563.5, and it managed to bounce nearly hitting my 566.4 level before we started chopping midday. And in midday, we had a false breakdown setup at 563.5. Now, this one right here, you guys got to understand, I'm trading in real time and I'm reporting the charts in real time. So when we had this false breakdown setup, in hindsight, you guys can see that that was a great entry. However, when I'm reporting in real time, I have to use my best judgment. So for me, I didn't report this false breakdown setup because I didn't trust it just yet. But what made me trust the bounce was a couple of things. After we got the false breakdown setup, the price came back and retested that 563.5 level as support, and it showed buying pressure. From there, it cleared 565 on the 15-minute chart, and that's when I trusted the bounce, and it led to a darn near almost a $5 bounce to the upside. And I learned it all in the Discord for us. So overall, it was a good trading day. There was definitely bullish follow through from Friday's bounce. But now that we finally got two green days in a row, what next? Will the bounce continue? Are we bullish now? As far as Uncle Chart is bullish or bearish, I'm still overall bearish. But I am a sheep and I follow the price action. So even if I am overall bearish, if the price action gives me a bullish setup, I will still trade that. Now, what made me bullish today? What made my general lean bullish today is because we recaptured 560.8 and SPY stayed above that level. It never invalidated the false breakdown setup. It never invalidated that breakout. If it did, I would have switched back to bearish. Today, we cleared another Fibonacci level, which is the 566.4 level. That's the 1.236 fib level. We recaptured it. So I'm going to approach that the same principle I approached the 560.8 level. We recaptured it, so as long as it's above it, I would favor more upside with 571 gap fill in play in the 200 daily moving average, around 572.6 ish. I have a level of 574 and the next fib level at 575.3 ish. Those will be my targets if SPY can keep today's breakout intact. To keep today's breakout intact, 566.4 must defend as support tomorrow. Okay? Now, the same way I say you don't want to call a bottom unless we get some type of false breakdown setup, you don't want to call a top unless we get a false breakout. So paying attention to the critical levels that were cleared or recaptured in this context is very important. It's important we know. And in this context, 566.4 is that level. So if you are bearish, you want to see that level fail as support. You want to see 565 fail. You want to see 562 and especially 560.8 fail as support. And you know, Uncle always say when the SPY is really bearish, it spends a lot of time below the 5 daily moving average. Well, Friday we recaptured the 5 daily moving average. Today we showed follow through in spending time above the 5 daily moving average. So as a bear, you want to see SPY break that moving average back down, and it's around the 559-ish area. Okay, so we got the bull case scenario, we got the bear case scenario. I'm telling you guys right now, what would make me more bullish is a recapture of the 200 daily moving average. That would be very bullish if that would be the false breakdowns of all false breakdowns. But don't call a top or trust any rejections unless it's strong enough to break down those support levels that I've mentioned. Okay, moving on to triple Q. Triple Q also showed follow through on the bounce. It managed to stay above that Fibonacci level of 479. I mentioned in my Discord, above it we're bullish, below it we're bearish, and above it, it managed to give us a pop up to 485.8ish, just shy of my 486 level. And despite almost hitting that level, we did not get a breakout or a daily chart close above the 484 level. That's my 1.382 fib level. Okay, if bulls want more upside, they will definitely have to recapture that level, clear 486, 488, and the Fibonacci level at 490. Okay, there is a gap around 487-ish as well. All those targets would be possible to hit. The gap would be possible to fill if it clears 484 and 486 tomorrow. Okay, if today is a dead cat bounce, remember you don't want to call a top or get bearish unless we get a false breakout setup. From here, 482.5, 481, and the critical level of 479 are the support levels to watch. If you want to get bearish, those are the levels you want to see fail as support to put 474 or lower back in play. Tesla overall chopping. We have a potential double top and a potential double bottom from Wednesday's March 12th price action till today's price action. Okay, but I do have some fib levels to watch. Today we broke down a fib level which was at 238.6. If Tesla can stay below that level, next support levels I have is at 236, 234.5, 233, and 230.4. All right, those levels fail, I would be very, very bearish on Tesla. If we are to get a bounce We lost a 238.6 level today. It'll need to clear that level to put 240, 242, and 243.8 in play. If those levels recapture, then definitely more upside is possible. I can see us filling the gap around 247 and possibly hitting that 252 level around where the double top is. If that clears, we are bullish, double top canceled. Okay, so we got the bear case now and the bull case now. Let's move on to NVDA. Now, NVDA, we have a situation here. It's been showing some good upside lately, but you guys see this green candle and this red candle. It looks to me that is a dark cloud cover candle, which is usually a bearish setup. So, you got to be very careful here. The levels to watch is 119.5 and 117. If those levels fail, we are bearish on NVDA. That dark cloud candle is showing bearish follow through. 115, 113, and we have a gap all the way down to 108.9-ish, guys. Those can definitely hit if those levels fail. Now, to cancel the dark cloud cover candle, 121 and 123 both must clear. To cancel out that two candle pattern, to put 124.6, 127, and 128.2-ish back in play. IWM's continuing its bounce, but it ran into a fib level around 205.6. If it wants more upside, that's the level to clear, to put 207.5, 210, 212, and 214 all back in play. If 205.6 truly rejects, then 203.6 must fail to put 202, 200.8, 199, and 197 in play, guys. Apple here, it's been bouncing the last couple of days, but it ran right into the 5 daily moving average. Not quite bullish just yet. As of right now, support is at 212, 214, and 212. If those levels fail, especially that 212 level, down to 210, 207, and 205.7 incoming. If bulls want to get some more upside, they must get above that 5 daily moving average, which is around 215, and then I have a fib level at 216.6. If those levels can clear, then more upside is definitely possible for Apple. Amazon still overall looking bearish to me. It still below the 200 daily moving average, still close below the 5 daily moving average. And if it can break down the fib level support of 195.5 and then support at 194, bearish follow through is what we can get down to 190 or lower. If we are to get bullish though, the bulls still must get above 198 and 200. Getting above that would get above the 200 daily moving average, and it would put 203, 206, and 210 all back in play. Look to react. Still overall bearish, but be ready for anything. Microsoft got a nice, it closed just a smidge higher. It managed to stay above the fib level around 387.4, so it's not quite a false breakout just yet. So again, if we are to be bearish, 387.4 and 386 must fail to put 384, 381 or lower in play. Unco charters will be bearish below 383 and 381. Below 383 would send the price back below the 5 daily moving average, and below 381 would be a breakdown of a critical fib level. Now, if we are to be bullish, 390 and 392 must clear to put 395, 396.3, 398, 400, and 401.8 all back in play. Here is Meta just chopping around. 605 is still the fib level to watch. Above it, we can get some upside, pop up to 610 and 613 would be a possibility. But if below 605, it would be overall bearish. And if we can lose 603 and 600, I believe we can go hit 597 and 595. Below 605, I'm bearish. Above it, a bounce would be possible. DXY looking bearish to me. It looked like it bounced a little bit, but didn't recapture any critical levels of mine. And the next critical support level I have is 103.1. Looks like it's incoming. And if it fails 102 or lower, it's the next level. I have 102 and 100.3. I'm not trusting any bounce unless resisting at 104 and 105.4 can both recapture. Coin recaptured the fib level today, which is 185.8, and it did show a little bit of bullish follow through. That's good. I have next resistant level as of right now from where is that in the post market at 190, 192 and 193.5. Those levels must clear to put 196, 197.6 and 200 all in play. If we are to get bearish, 187 and 185.8 must fail as support. Below 185.8 would invalidate today's false breakdown setup and put those lower targets back in play. Maybe send us back down to 177-ish. Doge just consolidating. 0.176 and 0.196 are resistant levels. Do not look to long unless those levels can clear, preferably both of them, to put 22 cents or higher in play. But if these resistant levels can clear and 0.156 fails, then Doge is heading down lower. All right, and last but not least, here is MSTR. It has an inside candle setup here, which signifies chop. As far as breaking out what it needs to do to be bullish, and the level it needs to break out, it's at 297 and 298.7. Both those levels must clear to put 300 or higher in play and end the chop bullishly. All right. Now, if we break down support 292, 290, we could possibly go hit the fib level at 285, and then a buy zone around 283 and 281.6. But to end the chop, the bottom of the chops all the way down at 272.6. So it has a lot of room to head down there. So if it does decide to head back down to the bottom of the mother candles range, you definitely could make some money shorting it. Pay attention to the levels that Uncle gave you. All right, 290, 292 and 290 fails, 287, 285 incoming. Below 285, 283, 281.6, 280, and so on would be targets all the way down to 274 and 272.6. Below 272.6, Uncle Chartist would be bear bias on MSTR. All right, guys, it has been a pleasure for me to make this video for you guys. Thank you guys so much for being here. Remember, you guys are master traders. You guys are money magnets. Peace.